you manage money for a living, and you do so tilted a lot towards some of those smaller cap companies out there. Just take us through what your thoughts were as you watched that closing bell come to fruition. How many fears and anxieties as a small cap manager really came to fruition given what we saw yesterday with the inflation numbers?
I wouldn't say it was overly, dramatic yesterday. I've been in 35 years, been through several of those types of sell-offs. I think kind of what happened is people are looking for that pivot from the Fed. They're looking for some sort of sign that this aggressive interest rate rising is going to come to an end. And I think people had positioned that maybe we would get something with the CPI data yesterday. Obviously, it's not appearing yet. Obviously, there's going to be a lag, or there is a lag in the data. So, we're going to stay invested. That's our job. We still see tremendous opportunities. Anytime you see this big of a sell-off, there are opportunities. And, these are the markets where we make our big money. It's just you don't realize it yet. So we're, like I said, we've been through this before. We're, half glass is half full type investors here at Hodges Capital. So we're going to stay the course. So
Craig, you mentioned these are opportunities. So if these are opportunities, where would then, or first of all, are you deploying capital, excess cash? And if so, where is it going?
Yeah, our favorite area is the energy space. Obviously with what you're seeing in energy, the high prices and the inflationary things, energy is very, very underinvested, and there's a new kind of a new attitude with the companies that are allocating capital. They're not investing as much. They're bringing most of that money to shareholders. So energy would be our favorite, but in inflationary environments, you want to own things like energy, materials, commodity type, industrial type names. So that's the areas that we see, that have the opportunity. And, let's not forget, everything looks pretty tragic like yesterday, but we still have a full employment. Wages are going up. You rarely see catastrophe type markets when you have this strong of a backdrop. So I would just kind of remind investors that, and if you stay fully invested since World War II, the rate of return you would have gotten, it would be in the upper 9%. Well, if you miss the best 10 days in that time period, your rate of return would be cut in half. It would be about 5.4% over that time period, annually. So the key is staying invested and taking the good with the bad. And there's more good than bad.
All right. So if there's more good than bad, I mean, if you are a stock market investor, you have to be somewhat optimistic, right? You have to believe that at some point in the coming days, weeks, months, years, it will be better than it is today. That's the whole idea of being in the stock market and the whole idea of growing an economy as a country. So if that optimism is in play right now, there have to be specific spots in the market that seem more attractive than others. You mentioned energy as one. Are there specific companies, stocks that you think stand out in this kind of environment that are on your shopping list?
Chesapeake Energy would probably be our favorite. Chesapeake's got a terrible reputation long term. They used to have the worst balance sheet in the industry. Now they have one of the best. Of course, they're in the natural gas business, which we feel like natural gas will be the best part of, I think both sides of the aisle probably realize that natural gas is going to be a great bridge fuel. And as we come into the midterms, I think you'll probably hear a lot about natural gas. But here's Chesapeake with only about a $12 billion market cap. But over the next 5 years, they're going to return $14 billion in free cash flow. That's tremendous. The stock trades about 3 times EBITDA. Insiders are buying stock. So I think Chesapeake's very misunderstood, but I think we're in the very, very early innings of a substantial move there in Chesapeake.